Hi, this is Charlie, and this is going to be a short session on using the multiple moving averages. I actually did a session on this last Friday on non-farm payroll morning, and but some people missed it, and so asked if I could do a recording of it. So I'm doing this recording now. So what I'm going to do is just look at how I go about approaching using the multiple moving averages, and using a couple of examples here. We've got the euro dollar, and then I'll also use the dollar yen, so to show you how I go about forming an opinion using them, and actually also about how you actually go about trading using them, because they're not always it's not always something that you can actually trade off of, but it gives you a zone, a buy zone or a sell zone that that you can then look and drill down into to then find an area that you might want to trade off of. So anyway, so for now, the multiple moving averages, I guess I better go through what they are. They're just normal moving averages you just put onto your charts, and you've got they're all exponentials. It's just the way that this is the way that these are set. So all of them, whether it be the red ones or the blue ones, they're exponentials. So with the reds, the settings are 3, 5, and 8, 10, 12, and 15. So this one right at the top up here would be the 3, then obviously the 5, the 8, 10, 12, and 15. So that's the 6 moving averages there of the on the reds, and they're all exponentials. And with the blue moving averages, they start off at 30. So it's a 30, 35, and 40, 45, 50, and then 60. You see there's a slightly wider gap to the last one. So I don't know why that's just the way that they were put together in the first place, but you could put a 55 if you wanted to. But anyway, so it's a 30, 35, and 40, 40, 45, and 30, 35, and 40, 45, 50, and 60. Right, okay, so that's those done. And they're all exponentials, like I said. So the way that I use them in their rawest form is that when the reds, so price obviously has moved up or crossed. So when the price has gone up, let's use it as a buy example first of all, and the reds have crossed above blues, then the first time that price pulls back down to the blues, that would be a buy zone. That would be somewhere where I'd be looking to be a buyer. Now obviously it didn't get down to the blue zone here, got to the blue zone over here, but that would be a buy zone over there. So first time the reds have crossed above the blues, and then you're looking for the first time after that the price pulls back to the blues as being a buy. Now with these, I don't actually go any lower than a 4-hour chart. I don't use them for intraday trading, and even when they pull back and say that's a buy, bear in mind this is a whole zone of the blues. So it could just, like on this example, just hit the first blue moving average, but it could have likewise come right away down well into these moving averages. So it is a whole zone, a whole area where it should find some sort of price should find some sort of support. Especially on that first test. Subsequent tests, just like any other moving average, I'm less interested in, but it's the first test I'm more interested in. So all you can do is say, okay, it's come down into the blues. What else have I got here from my normal analysis? Is there any other technical support or something on a smaller time frame? Could there be a divergence? Could we wait for something the price to close back inside my bands? Could it be that there's a reversal bar? Anything, whatever you might use, a pivot, even anything that you might use where you're looking to find support, then you can use that as an overlay with this sort of stuff. So I use these more to give me a general idea of what's going on in the market, rather than to necessarily trade off of, but they give me a general idea, general bigger picture. So anyway, so let's actually go about running through how I ascertain what's going on. Because as always, I have to use multiple time frames in order to build a picture, and sometimes I'll be looking at a chart and I look at one time and I think, oh, that time frame and that looks okay, and I go to the higher time frames and they're just in complete conflict, and so I can't get a read, whereas other times I feel like I've got a read of it. So first things first, let's have a look at this euro dollar. So I'm not interested in what's going on. I'm not going to tell you about what's going on. That's all that's happened in the past. I've already talked about that sort of behavior. So on the daily chart here, we've got the euros come down, and we've got the reds, which are I say crossing the blues, they obviously haven't crossed as yet, so anything could still happen. The euro dollar could certainly still, on this time frame, still come all the way back up yet and still be perfectly feasible. So at the moment, it's come deep into the blues. It's not a first test into them, so we could be in for a trend change, but we don't have to be. So not a lot to take from the daily charts at the moment, other than the fact that actually it has been a decent trend. It's come down, it's done a decent enough pullback, and it's having a bit of a bounce, and maybe it wants to go higher from here. So we'll have to see. Let's go and have a look at the higher time frames. Let's go to the weekly charts. Now on the weekly charts, we can see that again, a reflection of that wonderful trend that we've had here in 2017, that lovely move up we've had. It looks like a bull flag, and I've been saying this for the last week or two, that we've got a bit of a bull flag in play, and so therefore the trend is still up on this time frame, and so therefore bounces are feasible. And so if I was looking at what I've just seen on the daily charts and what I've now just seen on the weekly charts, I would still be bullish on the euro dollar. Now we have yet to pull back into the blue moving averages on this time frame, so I'm well aware that at some point the price will want to test these blues, but it doesn't have to happen straight away. Maybe the blues catch up and it happens in several weeks time. So but certainly if I was short, let's say I was short the euro dollar, then again, it's something that I would always pay attention to, is if we're coming down into a first test of the blue multiple moving averages, then that might be a zone where I'd be starting to look for reasons to bank profits. So if I was short, I'd be doing that. I'm not short at the moment. But anyway, so we're well aware on the weekly charts that maybe at some point it might want to come down for those multiple moving averages. Okay, so now I go out to the next time frame out, which is to the monthlies. Right. Now it starts getting interesting, because on the monthlies, this is the first time the price has got to the multiple moving averages. Now we can see that it hit the multiple moving averages back in May, and it had only the smallest of reaction, and it's just carried on through them. So we've got up to the far end of those multiple moving averages, and now having a bit of a reaction here. Bear in mind, it's the first test since the reds have crossed below the blues. So normally I would expect a bit more of a reaction as yet still to come. So now I'm starting to go out to those higher time frames. The daily chart said one thing, the weekly charts have said it's in a nice trend, but there is the potential for it to come down to those multiple moving averages, and it's a similar sort of thing with the the monthlies. The monthlies were into this first test of the blues, so yes, we've had a red bar and we had an indecision bar the month before, but still normally look for a little bit more downside, a bit more of a reaction from that as yet. So that is potentially there. So what I've just said about the weeklies coming down at some point to test those multiple moving averages, it's certainly allowing for it based on the monthlies. Now if I go back to the weeklies, it doesn't mean to say it has to come straight down. We could bounce for a few weeks here. It's certainly primed for a bounce. So we could bounce for a couple of weeks, 2-3 weeks, whatever, and then it still rolls back down for these lines. So it doesn't have to come straight down for them. And certainly it's been quite oversold in the short term. And so the scope is there for that bounce still to come. So, but ultimately, when I'm going out to those higher time frames, I see that that scope for more downsides. So yes, near term could certainly still have tradable bounces in place here, based on if we go all the way back down to that daily chart, could easily put a bounce back up into the 118s, maybe even higher. Maybe it goes all the way back up to the highs, but I'm not going to be looking for that so much now. So what I'd be looking for is bit of a bounce, and then we're just starting that at the moment, and so over the next week or two, and then for a gradual rollover. That's what I'm sort of leaning towards based on what I'm seeing here with the monthly charts, and actually right away out to the quarterly charts as well. If we go to the quarterly charts, we can see that we got right up to the blues. The reds have crossed down below the blues, and we've got right up to them. Now it is what I call an air kiss. You can see it didn't quite, you can just about see it there, didn't actually quite hit the blue moving averages there. So it does suggest at some point price will come up at some quarter in the future come back up and hit those multiple moving averages. But at the moment we've got within a gnat's whisker of hitting those, and so and we're having a bit of a reaction. But again, we could still have a bit more of a reaction yet. But again, this quarter on quarter, it doesn't mean to say it has to come straight down either. So that's how I look at them. I'm just lining it up across the time frames, and if I get it into a position where I can say, okay, I pretty much get what they're doing or what price action's doing in line with these MAs, fine. I've got an overall view. So that's what I'll do there. Okay, sorry, I'm just being asked here. What's the lowest time frame? Yeah, what? Yeah, you. Niche. I've said this several times, and that's why I'm laughing, because I've said it on Friday and I've just said it again today. But the lowest time frame I'd come down to is the 4-hour chart. Yeah. So yeah, the 4-hour charts is about as low as I'd go. You start going down to a small time frame, intraday time frame, it just starts getting really fickle, and so harder to get a read of. So I don't even bother. I don't even bother going down to an hourly chart really. So, and the 4-hour chart I don't go down to that often. It's really the time I'll go down to a 4-hour chart is if I'm seeing if I'm getting very close to getting an entry, then I might go down to the 4-hour chart and see if there's a first test of the blue moving averages on a 4-hour chart, because it's already into the blues, let's say on the dailies or whatever, something like that. It'd be as an excuse to try and find an entry zone. So more than anything else, I don't tend to do it as much for analysis because yeah, they use the higher time frames for that. Okay, so let's now go to a different currency pair. Let's go to that dollar yen. And with the dollar yen, okay, so this is now the daily chart, right? Okay, so the daily chart, we've got the reds have crossed above the blues. So again, this is a market whereby, I say again, the euro on the daily charts isn't the same, obviously. It's already been in a long trend. But this is in an early stage of a trend with everything fanning out. So if the price was to move back to the blues, which it will do at some point, then that would be, in my view, a buy zone. I have to treat that as a buy zone. Okay, now let's go out, but that's only one time frame. So it's all very well looking at one time frame. We have to make sure that the higher time frames allow for that. So then I'd go up to the weekly charts. So on the weekly charts, we can see that the reds are in the process. Yeah, there they are. They're in the process of crossing the blues right now. So now the blues are very tight here on the weekly charts, and this is an important factor because sometimes they will get very tight, and that is just a reflection of when a market has basically been chopping sideways. So as we can see, the dollar yen had this wonderful move up back in 2016 and then entered into this sort of sideways range. And so the multiple moving averages will just pinch together. Now at some point they have to break out. They look like they might have been breaking to the downside here just a couple of months back, and but it's turned around, and maybe we still push to the upside. So when they're tight, just bear in mind that it could just mean that we're just chopping. But certainly at the moment, we've got the reds back above the blues, and the potential is therefore to go higher. So we've got the daily charts, the reds above the blues, and the weekly charts, the reds are pushing above the blues. They're not completely there yet. Oh, there they are. But the blues haven't fanned out yet. They're just still together. That could take several weeks before the blues start fanning out. So that's if they're going to. And we do break out this range. What I do like about the weekly chart, just coming back down to normal analysis, is that we've got this trend line coming across all the way across. I'm not going to be able to draw this on that well, but anyway, it sort of comes somewhere like that. So we've got this trend line with this sort of head and shoulders type price action coming along the highs, across these highs here. So I would still love overall, it would fit well with what we're seeing on the daily charts and the weekly charts for the dollar yen to go higher still a bit more, at least up to that trend line. Then we'd have to see from there whether it reacts and rolls over from there or whether it tried to go for a breakout. So at the moment, yeah, that all looks fine, but then we've got to go to the weekly chart. The higher time frames again. We've got to at least go to the monthly charts. So when I go to the monthly charts, what's this saying? It's not really saying too much. Again, it allows for the dollar yen to go higher. We're sitting here, the price action has been sitting on the blues for several months. Reds are still just marginally above the blues. So as it currently stands, yeah, there's nothing saying, oh yes, this definitely is counter to what I'm seeing on the daily charts. And then lastly, we will go to the quarterly. I don't know if there's anything going on the quarterly charts here. Okay, again, we've got the quarterly charts. We had the reds above blues. We've come back to test the blues whilst they were still very tight, but nevertheless. And again, they're in that early phase of potentially fanning out. So again, even the quarterly charts allow for the dollar yen to go higher. So at the moment, when I look at the dollar yen, I've got a market which has got lots of things lined up. I need to try and go to a market where maybe we don't have everything lined up. So let's go to, okay, I'm just picking on anything, because it'd be nice to be able to show you a chart where we've got a bit of conflict or where there's just not a lot going on. So let's start off with this Aussie yen we've got here, breaking down a bit, nothing really too much going on the daily chart. So let's go to from that. I'm not doing any other analysis other than just using these multiple moving averages. I just want to give you some examples of sometimes where it's not really saying too much to you. So okay, so that daily chart wasn't saying much. Even the weekly chart's not saying too much. Maybe again we've got these moving averages fanned out a bit, but again, price could come down to those, but not really saying too much other than that. Let's have a look at the monthly charts. Monthlies, the reds are trying to cross the blues at the moment, but again, very, very flat and tight. So, and they've not crossed yet. So, not really saying too much. So here we've got a situation or a market whereby it's less clear. It's certainly less clear as to which way this market wants to go. Hopefully, you see, if you're watching this, what I mean here when I go for an example or two of a market which doesn't look quite so clear. Let's go and have a look at the dollar CAD to see if there's anything going on here. This is the monthly chart, so this is the first test back into the monthly blues. So we can see it's come all the way down to the lower bands, if you want to call it a band, but the lower zone of the blues, and it's now just bouncing a little bit. So that's on the monthlies. I should have started this off with the daily charts. Daily charts has come up to the blues. It's already tested them before, so it was in a downwards trend here. It's tested them, fallen away, and now we're trying to cross, but we haven't quite got there yet. Let's have a look at the weekly charts. Okay, and the weekly charts we've broken down, but we're going to, at some point, if the dollar CAD can come higher, this is going to be a first test into the blues. So that would be a sell zone up there. So the dollar CAD, I see, has the scope on the daily charts to go higher. Has the scope there. It's not saying anything there. The weekly charts has the scope to go higher. It doesn't have to, but it has the scope to go higher, to go up and hit the blues. And the monthly chart has the scope to bounce because it's a first test. But at some point there should be some resistance which is hit when it hits those multiple moving averages, those blue ones on the weekly charts, and so on and so forth. So hopefully I'm giving some, and I'm just picking out these charts. I mean, I can basically pick on anything. Let's go and have a look at, I don't want another yen pair. Euro pound, let's have a look at that. I'm trying to find a pair where it's just really not clear. So let's start off with the daily charts. Okay, daily charts, reds have crossed below blue. Blue haven't properly crossed yet, but anyway, it's still got up to them. They haven't properly fanned out yet, but anyway, so it's a reaction to the downside so far there on the euro pound. Let's now go to the weekly charts. Weekly charts were into the blues, but it's not a first test into them, so that allows for us to go lower, although it is into that as a support zone. Let's have a look at the monthlies. And the monthlies is just in the reds. Again, no major conflict. If it started breaking down based on those weekly charts, then there is certainly space for it to come down to the blues on the monthlies. So let's go back to those weeklies. Was it the weekly I was looking at? Sorry, not the weeklies, the dailies. Yeah, so if it was to carry on starting to come down, then at some point I'd be looking for it to run down towards these multiple moving averages on the monthlies. Okay, I've not managed to find anything with any major conflict there today, but sometimes you look at a chart and there is. Anyway, hopefully that's given you a little bit of scope there as a training session of how I go about using those multiple moving averages. It seemed a bit easy there, but there'll be other times when markets are chopping around and I just won't be using them at all. So at the moment they're sort of there's a plenty going on with them. But there'll be other periods where I just don't have a read of them, and if I don't have a read of them, then I just ignore them and just that's it. If they're just chopping around, not really doing too much. So hopefully that's been of use.